And then the next one, homeowners insurance. Definitely, this last week proved, right, how valuable insurance is. The homeowners insurance, some different things. Hazard insurance, which consists of coverage for property damage from wind, fire, hail, theft, similar damage. Obviously, your liability insurance, which is going to cover you for injuries to others that occur while they're on your property. You've got the personal property insurance for the things that you own that are in the home. And then the last one, the flood insurance. And I'm not sure if you had any friends or anybody that you knew that was affected by the flooding last summer or the flooding recently. That flood insurance is something that really have to take a serious look at. My ex-wife lives in Cross Plains, and the creek goes right through their backyard. And they'd been there for 15 years, never ever had been a flood. 5 years ago, they said, you don't need to worry about flood insurance. So they dropped it. And when that flood went through in the summer, that creek filled up so much and it came up to their house. Their egress windows in the basement, which are about this high off the ground, when they were in the basement looking, the water was halfway up those windows. But the windows were holding. Everything was okay until it went around into the garage and then down the basement steps. And they ended up with 3 feet of water in their basement. One of the most tragic things, I would not wish that on anybody. And so it's something, again, you want to make sure that you take care of and you talk to. Another insurance, I'd be remiss if I didn't bring this one up too. The one house that I told you about, that when my wife and I first got married, that we moved into, that wasn't even on the market. We were in that house for 2 days, Sunday and then Monday. Monday night, it was an old house, 1918 is when it was built. And Monday night, after we moved in, my daughter's in the basement. There was a little freestanding toilet, because it's an old house, just in the basement, the bottom of the steps. And my daughter comes screaming up the steps, Dad, 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 the toilet's overflowing, the toilet's overflowing. Well, I went down there, it wasn't just the toilet overflowing. 6 feet away was the drain, and up from the drain was sewer water, backing up into it. Now, we'd been in there for 2 days, and it filled 3/4 of the basement with sewer water. And fortunately, it was an older home, so when we met with our insurance agent, the insurance agent said, this is an older home, we probably should do sewer insurance as well. And so we did. And it was pretty lucky because it was a mess. We had to have a whole company come in and clean it all up. And there was one finished room in the basement, so that all had to be taken care of. So again, those are things you want to save money, you want to look out for it, but at the same time, we know that you got to be protected. You've got to protect that. That's your investment. That's your baby, and you got to protect it. So make sure that, again, we take care of it. With the flood insurance, it's the most common natural disaster that there is. And it's rarely covered under homeowners, renters policies, or anything like that. So that's something that you definitely want to make sure that you ask about. And if there's any chance, any possibility that you're going to be in that situation, get it taken care of. And the things that affect your rates, geographic, type of construction, type of fire protection, the house size, the condition, the type of the contents that you have, your credit score. And that's a big one that people forget about. And that's another good reason to maintain your credit, because statistically speaking, people who have good credit are better risks, and so that'll affect it. The type of policy you carry, the size of the deductibles you carry, and the company you choose. Now, looking at the deductible for the sewer thing, we carried a $1,000 deductible because we figured, we're never going to have to use it. Now, there's a good chunk that we were going to have to pay. Fortunately, the previous owner ended up having to pay it, but it still gives you that opportunity to have these coverages, be willing to take a little bit more of the responsibility of it, and be able to at least afford the major coverage. And then last and finally, the company that you choose. A lot of companies are out there. Their rates are going to vary incredibly, so make sure that you choose carefully when you do that. And then the last one, closing. And this is a process where you're going to feel like you are signing your life away. It's like you're signing your firstborn and your lastborn and every born in between. These are some of the documents that you're going to be signing. There's the closing disclosure, the mortgage note, the mortgage, there's affidavits, there's the deed, title insurance, title abstract, survey of property, escrow analysis. For most of us, these are things, and for me too, these are things that are just over my head. And I've done two different things when I've closed on homes. The very first home that I closed on, I hired an attorney. And I had an attorney sitting right next to me. And that attorney could explain each and every document that we were going to sign. Give me a 10-second, 15-second description of what it was that I was signing. And I felt really comfortable about that. Since that time, I've relied on my realtor sitting next to me. And same kind of thing, because I've been through the process before. When they kind of re-explain it, it makes a little bit more sense. So just because, when we throw these up here, you're like, I have no idea what they are. Don't feel like you've got to know the ins and outs of each of these. Just have somebody with you that can explain those and make sure that you're doing it. Now, the term that does confuse people is the last one, the escrow part. And what is that? And there's a lot of different types of escrow that are out there. I'm going to talk about just one of them for you. And escrow, it's additional money that's added to your mortgage payment. It goes into what's called an escrow account in order to pay your property taxes and your homeowner's insurance. It's often required by your financial institution to be sure the property they're lending you money for is taken care of. Having escrow bundled into your mortgage makes it easy to budget for taxes insurance because you're paying a bit every month. And that escrow is basically like an extra savings account. So you make your mortgage payment, and within that mortgage payment, a certain part of that goes into this account, and they're holding on to that for you. So when you get your tax bill in December, the mortgage company, in most cases, correct me if I'm wrong, but in most cases, just will take care of it for you. Money comes right out of your account and gets paid. Your homeowner's insurance, that premium comes due in either December or January. Again, the mortgage company takes care of that and pays it for you because the money is there. So it's not like all of a sudden you've got to come up with this money at the end of the year for your property taxes or for your insurance. It's already stuff that you've been saving over the course of the year. Now, the drawback, how much interest are you earning on that money when it's put away for you? Nothing. So some people, again, if you've got over the 20% or whatever, some people say, oh, I'll take care of it on my own. But I think for new homeowners, I think this is a great kind of relief because you don't have to worry about those things. You're putting money away. It's been analyzed. So what's being put into that account is going to be enough to cover those expenses at the end of the year. So I think that's a very, very important thing to have. All right. Do you allow or have it for over 20%?
If you have less than 20% down, we would require you to escrow. So you would be escrowing for your property taxes, your homeowner's insurance, and then the mortgage insurance. Those are the things that would be collected. If you have at least 20% down, then it would be your choice as the borrower if you wanted to escrow or not.
Okay. All right.